Hey everybody, it's Brian here from quantlabs.net. I'll be showing you an important video of a script that I'm working on that's going to basically grab data from Yahoo. In this case, what I'm about to show you is the individual asset. So what we're doing here is we're grabbing a variety of, as I said, metrics that can be used for idea generation. So I'm going to show you that. And what will follow also is other videos, some hints on things that you should be aware of in terms of option chains and grabbing liquidity, seeing if it's worthwhile to trade. So let's get to it. Okay, so again, this is a script. I'm not going to walk you through it essentially, but what it's going to do is going to download data from Yahoo, and I'm going to show you the metrics that are used. So let me just clear out reset everything. So what I've got here is, so we are now quitting our debugger. This is all done in MATLAB, of course. So let me just show you, I have accidentally cleared out my breakpoints. Yay. Let me just reset them. I got 1, 2, 3, 4 sections that we're going to run. Okay, so I'm going to run them. Now, the first thing you need to know is that we're working with IBM. So we're going to download data from IBM. So basically, what it does is it grabs the current day minus a year, and then it grabs the data from Yahoo and also calculates the returns of that time period. Okay, and what I'm using is end of day. Now I can obviously alter it to as far back as I want, but for now it's just end of day 1 year data. So what we do here is the first metric that I'm using is something called ATR. So right now, what I've done is I'm calculating the true range, or ATR, period of 5 days, 20 days, 60 days, and 250 days. So we're using that as part of the way to measure performance. Next thing we do is we calculate some statistical sort of stuff. Let me just continue here. So we're grabbing here other returns. We're grabbing the mean, we're grabbing the standard deviation, variance, kurtosis, and the skewness. Okay, fine. Now let's continue to the next one. So what we're doing here is we're grabbing EPS. We're grabbing the current EPS. We're grabbing the next year's EPS. Again, this is calculated by the company themselves based upon guidance. And we're also grabbing the next quarter EPS. So this is another measurement of how the company will feel about their forward looking. And the last thing we want to do is grab the market cap as well. Because when we're going to be trading anything, we want to make sure that we are at least trading $1 billion worth, okay? Anything below that, liquidity always becomes a problem. Let me just see here. I'll give you an example of what I mean. So the next metric we use is we calculate a Yahoo options chain for this particular asset of IBM. Essentially, I've shown this in another video, and off it runs. Now, in my one of my videos upcoming in this video segment, I guess we'd say, data out. Okay, so we have here calls. I'm just going to reiterate this. We calculate our second month, and essentially what we're looking for is liquidity. Because this is our interest and our volume and open interest, we need to make sure that these hit probably at least 1,000 on the volume. Let me just show you. I mean, probably this is the highest, 375, but maybe if I remember, third month might have been better. but it's a good indicator of how to use how the outlook on the options are for this particular asset. Um, so let me just continue. I'm gonna see how it plays out here. Another good way to calculate it is using Yahoo itself. So let me just try something here. Okay. So for those that need to know how this works, I've shown this probably numerous times. So my case, we're going to use IBM, right? So that comes up. We're now using the option data and calls. That's the expiries for the Friday, October 10th, but we're using November really. I'll be showing this in the next video as well. But here, what we're looking for is volume. There is none, no liquidity, open interest, but there's very little activity happening. So again, that is a very good indicator of, see how January is looking for this expiry. Again, it's something spooked. Let's do a more liquid asset. QQQQ. No, that might not be a good one. Yeah, let's just do SPY as usual. Options. Okay. So let's say December. You know why? Market's closed. That's probably why. But you can see here for this contract, we have volume of 2,400, volume of 5,400. That's the sort of numbers we like to see for liquidity. So we know that there's still some liquidity for this month, for November, for SPY. My case in this example doesn't exist in IBM. So hopefully the other videos will detail it more.